Here we have the current stock market analysis for GameStop Corporation, stock ticker GME. Before we begin with this chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your comments in the comment section below so that other traders will be able to find this information more easily on the platform. So here we have the 30-minute price chart, and as we can see here, the share price itself has started to move higher. More near term, we have posted price lows below the $20 level, and this is fairly significant because this is a psychological zone that has been watched on several different occasions. Here we can see that the price itself posted at $19.88. So the overall effect here has been that the share prices were previously trading below the exponential moving average cluster, and now we're trading above the exponential moving average cluster. So that on its own is a positive development. We have seen a fairly significant reversal here, and similar reversals have started to occur with AMC as well. I understand that not everybody that's trading GameStop is also trading AMC, but we are seeing a relatively similar type of price movement that's occurring in that stock today as well. The real question at this point is whether or not this recent rally is significant in nature. If we sort of pull out on the price chart a bit here, we can look at the relative size of this price movement and see that there's still a large amount of distance that would need to be covered in order to recover some of the prior resistance zones that worked as a strong obstacle in the past. So previously, there are a couple of things that I can point to on the positive side in this price chart. So specifically, one would be this move above the exponential moving average cluster. Here you can see clearly we were trading below there, and even to a substantial extent. I mean, we were sort of trading a far distance away from the moving averages. And that typically is not sustainable. For the most part, a stock will need to revert to the mean, which means that it needs to sort of drift back toward the moving averages. You really can't drift very far away from the moving averages for very long. So it does stand to reason that the share price itself would need to sort of move in the opposite direction in order to revert back to the mean, move back toward the moving averages. So the overall effect here has been strong enough that share prices did actually break above the exponential moving average cluster. And then in addition to that, those moving averages are starting to expand, whereas before they were extremely flat. We were really seeing a flat line in the exponential moving averages. So a break above those levels would not have been significant previously. There were a lot of videos that wanted to sort of point to these moving average crossovers and things like that. But when you're dealing with a sandwiching effect here of these moving averages, it's not significant because you could move a couple of cents in one direction and see an upside break or even a downside break. It really doesn't have much significance when the moving averages are flatlining. But now, more recently, we're starting to see these exponential moving averages broaden out a bit. So I would say that this is a more impressive signal than it would have been previously, which was way back when everybody was trying to point to that type of event. This would actually be a better time to point to those types of events. But the real question here is, how meaningful is this price movement within the broader context here? Currently, we can see that this $20 psychological handle has been broken. That is a bit worrisome here because essentially this does mean that buy orders in that area have now been absorbed. So we have seen a bit of a break below there. And you do sort of see these kind of relief rallies in situations where share prices start to see dramatic declines, especially in cases where those declines start to deviate away from the moving averages. So seeing a bit of a price movement here, is somewhat expected. It's not absolutely unheard of to see a price movement like that. And I do think that what you're probably seeing at this point would be some short positions that are sort of taking profits at these lower levels. We did see a break below 20. Who knows how much follow through would likely extend past there when you're looking at a prior support zone coming in at $18.73. So we're right around $1 away from that major support zone. So it's not entirely surprising to start to see some people take profits on short positions at that point. In addition to that, one other positive that I can point to would be this break of the trend momentum reading in the relative strength index. So what we can see here is that there was a prior period of downward trend momentum, which was quite strong, and this had been in place, since roughly share prices failed at this $30 mark. Since then, we have started to see a break here in the topside direction. So this does suggest that there is at least a possibility here that longer term trend momentum has completed itself and is no longer viable or active, no longer influencing prices to a major extent. That is a positive signal. The question though is this is a 30-minute price chart, so this would not be the same type of event if we were to pull out to a daily chart or a 4-hour price chart or something like that. So this is still a bit of a shorter term time frame. So the changes in the trend momentum here could still be short lived, and that does need to be kind of understood and kept in mind. So to the top side, I would be encouraged a bit by the fact that we did break back above this resistance zone, which came in right just under the 22 mark. This was an old support zone that would be expected to work as resistance. We did break above there at the same time that we broke above the exponential moving average cluster and broke above this negative momentum reading in the relative strength index. So those are all positive signals, and you've got a couple of them at once, which does show that there are some positive signals here. That's really what you're looking for if you're trying to envision a possible move to the top side. But again, the real question is how sustainable is this move? The main price zone that I would be watching to the top side currently still comes in at this $23 mark. I think that you need to see a little bit of a break above there before you start to even really encounter the next major resistance zone. Currently, what we're looking at here would be a test of roughly 23.10. If we're able to make a convincing break above there, then you can start to suggest that pressure is being taken off of the downside. But there are some real questions to be asked here because we did break through this prior support zone at 2039, which I did not expect to hold, and it did not hold. And then in addition to that, we did also break below the $20 mark. So there's a lot of selling pressure here that has absorbed a lot of buy orders at the moment. So if we do see a failure here near term and we're not able to retest that $23 mark, there's very little reason to believe that we're going to maintain the 20 handle much longer. We've already fallen below the $20 mark, and if for example, we're already starting to see some turnaround signals here. If you look at this price candle formation, this is an evening star pattern. I can sort of drill into this a bit more closely. I'll finish this video here, but the final point I'll make here is that this is now, you did break above the exponential moving average cluster, but this is a three candle evening star pattern where what you have is a strong bull candle followed by a smaller period of indecision in the market, and then followed by an equally large bearish candle that signals a reversal point. So as you can see here, it looks like a turnaround in the negative direction. So if this area does start to become resistance, it would be very negative, because that would essentially mean that the resistance zone has then moved down from 2310 to roughly 2245. So that's not the type of scenario you want to see. So here's the current market analysis for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.